really, really well. Well, another time for another conversation, and to start with, make sure you've got your coffee ready. I've already been into mine a little bit. And of course, make sure you've got something nice and healthy to eat. And take a look at this. You can see that this is courtesy of Leah Wendrick. She's obviously very kind and considerate of my type 2 diabetes and my health and well-being, or maybe she's after my job, so that's a quick exit. But don't stress, don't stress. Don't tell my wife either. But yeah, no, we do have the right stuff here. We've got the fruit, the nuts, and the diabetes-friendly muffins. So we'll make sure we eat those, and not that other stuff. That's no good for you. Anyhow, let's move on. We've got a great conversation today around fintech. We'll come to that in a moment. But of course, to start with, we better thank our supporters and sponsors that back the FBAA and Q&A with Whitey. And I'd like to give a shout out and thanks to ALI, Bluestone, Finstro, Prosper, Heartland, Insurance Advisor Neck, On Deck, Pepper Money, Credit Fix Solutions, Affordable Staff, Early Pay, FunTap, Strive, FE, BizCover, AAMC, and we have Amfin, Trailbook Loans, Notify, and OptiPay. Thanks very much, everybody. We appreciate your support. Enables us to keep making content free to you, and it's a good thing. We're happy about that. The other people we want to thank, of course, is Suncorp, who is our mental health sponsor, if you like. They make sure, again, that we can bring things to you free of charge. And that's our mental health confidential counselling program that's available to members of the FBAA. Ring that number on your screen, 1-800-808-374. If you feel like you're in a dark hole and you can't get out of it and you need some help. Assured, who are the professional counsellors there, are there to help you, and it's free to our members, your family and your staff. If you need some help, take it. We all suffer at some point in our lives with mental health illnesses, and we need to reach out and get some help. And of course, Suncorp, wonderful people they are, they pick up the tab. So we know nothing's free in this life, so you don't get billed for it, Suncorp does. Anyhow, thanks to Assured and to Suncorp for their support in that mental health program, exclusively through the FBAA. All right. Let's get on to today. So today we have this enterprising young man, young Adam Grocke. Adam, you there somewhere, man?
He's absolutely, mate. Just coming in now. How you going?
Good, mate. Good. You?
Good, mate. First of all, like shout out to Suncorp. I mean, that's amazing. I didn't know about that, and that's incredible for mental health. I think that's an absolutely like exceptional thing for them to be doing. So that's incredible. Really, really good.
Yeah, it is. We were fortunate the other year to start that. We actually started the conversation before COVID, and obviously when COVID came in, it increased the reasons why that should be. And yeah, so nobody gets any information from that. Nobody gets any details. All the wonderful folk at Suncorp get is a tally, said X amount of people have used, pay the bill. But it's good. It does a great thing for people. And a bit of a sidetrack from today, Adam, but just following the conversation, you know, we've had brokers ring us and say to us, not only have you saved our business, but you saved our lives. And that's a big thing. And we're very honored and privileged to be able to be a part of that conversation and that journey and that level of support, because it is changing people's lives. And it's a great thing. So, awesome. Fun and games. So, mate, let's have a chat today, and the topic of conversation is understanding your client through fintech. But before we get to that, most importantly, you and I need to have a conversation a bit about you and what your background and where you've come from. So all about who Adam is, and also why that you were unfairly treated with enhanced genetics when the rest of us weren't. Look at those shoulders. My God, my son. So, mate, we'll come back. So I want to know why. But mate, give me a bit of a background story. What were you doing sort of as you came out of school? Assuming you went to school, there's an assumption for you, but we'll assume you went to school. And before you got into doing what you did, just a bit more of the background understanding about yourself.
Yeah, so yeah, thanks, mate. And look, pleasure to be on board. A bit about myself. So I mean, I came out of school. I went to uni. I was lucky enough to go to school. Went to a good school and went to uni. Didn't really know what I wanted to do, and I went into industrial design. Industrial design is essentially about creativity, ergonomics, and building products and prototypes for customers. Yeah.
Yeah.
It was really interesting. It was a really interesting course. Like it really played in with my creative side and sort of tactile making prototypes. But then I gave that away, and much to my parents' disapproval, I didn't complete my course. I had one subject to finish out, so you could actually say I'm a uni student dropout or a uni dropout technically.
Mate, I'm a high school dropout, so don't stress.
Well, mate, we're the ones that do the good things because we're prepared to back ourselves, I guess. So
yeah.
And then so stepped out of that. I didn't know what I wanted to do after that, and I wanted to own a business, and I had an interest in property and finance, and had almost like a early life crisis at 24, and then got into mortgage broking, and always had that interest in property and finance, and ended up my father was a financial planner, and so there was a good little link in there where I could sort of come in and start servicing their clients. So I think it was 2008 that I started, so it was right before the GFC, and it was just as the banks were cutting their commissions. So what a time to become a broker.
Yeah. Exorbitant interest rates, unlike what we're about to see here in our country today, but exorbitant interest rates and getting penalised with comms along the way. So you were a broker as well, yeah?
I was a broker. Yeah, I was a broker for 12 years. Yep, started off as a broker. 12 years. Started off as my own sort of. Just went out on my own. I mean, the industry's come a long way since then with mentoring, professionalism, everything. It's fantastic to see how it's evolved. But started off as one-man band, built up a team of 9 people. And
sorry, mate, you're talking how it's evolved in 12 years. You should see how it's evolved in the last 44 years I've been in it.
Absolutely. And even the acceleration over the last 2 years has been incredible. Like what the industry has achieved in 2 years has had previously taken them 10. So it's been amazing.
Yeah, certainly has. Now let's talk about genetics, my friend. You're very unfair to the rest of us. You obviously work out. You're obviously a very fit man. Do you do something special to keep your fitness up? Because we talk about mental health. I mean, the part of that, our mental health, is also our physical wellness. It's the wellness of our entire body. So it's the mind and it's the body as well. So obviously, mate, you're doing something there to keep in shape. What's that? Talk to us about that.
I played sport when I was younger. I was lucky enough to play.
Like this, that's embarrassing.
I wasn't trying to do that. Arms down from now on. I just had a scratch on my head. If you do that, you point somewhere, and then it makes them flex more or something like that. So, look, I grew up playing like AFL, Aussie rules. I was lucky enough to spend a year with the Power, so I was kind of brought up with very much a physical background, which was cool. Like molding your body to suit the purpose of AFL, essentially. Yeah. And that's just given me a foundation now. But on that, there was actually probably 3 years when I left the system where I didn't do anything, and like I was just completely burnt out and exhausted. Didn't walk into a gym, didn't want to do running, didn't want to do anything. Was completely sort of just burnt out from being in the system for about 15 years. And on that mental health bit, I did notice that my mental health declined. I became more negative than I used to be. I was always a very positive person, super optimistic, and exercise and getting back into exercise actually was one of the things that turned that around. So I'm a massive believer in exercise for mental health, to be sharper, get those good endorphins flowing, and try and work out. I mean, I've got 2 young kids, so it's sometimes difficult, but try and work out at least every couple days and do something, even if it's just a quick one.
Bicep curls for the kids, mate.
You can. Yeah. They're almost getting too heavy for that now. I'm not that strong anymore, so.
But you're right, though. There is a link between your health and how that, your physical health and how that plays out with your mental health. And that is certainly founded in the science of what goes on. And actually, in fact, I was late coming into the office this morning because I was actually shooting a video that it was only a short video, but it's a snippet around that, is the fact that I know that with, I suffer from severe anxieties, my wife suffers from depression. We all get impacted somewhere at some stage in some point in our lives. But the key thing that I've always found, and I've spoken on this several times within industry and outside of industry, is that when you get hit with something, whatever it is, and when you get hit with a mental health challenge, let me put it that way, what you need to do is to do something you're not doing at the time. So in your case, when you stop training and you stop playing sport and football and so on, when you got out of that, you got caught up in the dark space, and then once you got back into it, you got the release. At a very different level, you know, if I get hit with severe anxieties, it doesn't matter what I'm doing at the time. I could be sitting down watching motor racing on TV, or it could be anything. I'll be sitting at the desk here, it doesn't matter. What I've got to do is to get up and do something different, because it's whatever happened then is wrong for whatever reason that is in my mind, and you've got to get up and do something different. And make sure it's not just a one-off. You know, so I like riding motorbikes, and sort of around that theming that I was talking about. It's just got to be the right headspace for you. So,
yeah, absolutely. And look, and just touching on that, because I think it's relevant. I mean, I hadn't done anything for 3 years. I saw my brother posted on Facebook that he was attending this ultra marathon, so a 56K marathon running through the Adelaide Hills, and I'm super competitive, and I love a big hairy goal that people go, you probably can't do that. So I'm like, hey, I'll do it. And 10 weeks later, we ran a 56K marathon. And
seriously?
Absolutely, yeah. So it absolutely physically and mentally destroyed me during the run. I remember like distinctly crying, like just being an absolute broken person on that run. Just the exhaustion was incredible. But it was an event that then triggered a change in my mind shift, where I went, okay, well, hang on, I could do that, and I could do that sort of at the drop of a hat with 6 or 8 weeks worth of training. What else can I achieve that I don't know that I can't do? Now it took me about 3 weeks to recover from it because I was exhausted and spent, but it was a good learning curve.
Yeah, it's a very valid point. I think a lot of us miss that when you actually set your mind to something, you'd be amazed at what you can achieve. And I think that the biggest destroyer of dreams is apathy. You know, sitting on your backside and just not doing anything. Hopefully, it all comes to you. Life's just not like that. The very old saying, you reap what you reap your rewards from what you've done. And if you do nothing, you're going to get nothing. But that's I don't know if we're all in that extreme that with 6 weeks training we can run 56 Ks. It'll probably take 3 decades to recover from that, not 3 weeks. But pop out. I mean, don't get me wrong. You have the physical strength in your body to be able to do that, and it's not everybody's gig. But the principle of what you're saying is the same for everybody. It's the mindset, committed to it. It's pushing through the hard times. So I bet you on that run, as you said, you know, times there you were crying. It was just that intense. Life is like that. But in the same as that run that you did, it's the same as in life. You have to push through it, right? Unless deciding you want to push up daisies. That's a different gig again. But otherwise, life goes on. We've got to push through it and do more. So, mate, I didn't know that's where our conversation was going to go. So that was very interesting. I hope everybody else found it interesting. And look, just as a point of note, as much as I'm in the office today, hence it's not a dodgy background, it's just the view out my office. You're in a hotel room, so the bed in the background and the picture of all the stuff, it's just what it is. It's not your office, is what I'm saying.
No, it's not. I wish my office was this big. So.
Very good. All right. Now let's talk about fintech and understanding clients with fintech. Now, obviously, your business is heavily integrated and revolves around the fintech space. Before we go deeper in the conversation, tell us a bit about what Sherlock does, and then we can frame the conversation around from there.
Yeah, absolutely. So I think so. I mean, Sherlock came from a problem that I experienced as a broker. It was a problem that I had with my book, and that was all around retention and how can I better service all my clients as my book grew in a cost-effective, successful manner that created a deeper engagement with my clients. And the problem that, I mean, you know, it's a problem across the whole industry, is that, you know, it's very expensive to put on 1 or 2 people just to service your existing clients. And then when you do that, you kind of go, well, where do I even start? Like, who should I be talking to? Do I just start with the oldest, or, you know, and how do I engage with these people? So what we've built and what Sherlock does is Sherlock's focus is to automate client retention. So we believe that a client, when they come to a broker, and they come to that broker to get an original, first home or an investment property or upgrade, they should stay with that broker for life, and there's no reason why they shouldn't do that. And we see a significant gap in the market is the automation of that retention. And the retention strategy, there's 3 subsets to that. It's predicting who's likely to leave, so using artificial intelligence to predict which clients are at risk of leaving. Repricing all of them to keep them on a competitive interest rate, so keeping them with the same lender, and then also refinancing if there's a better offer in the market, and that's all down to automated retention.
Okay, now let's hang on these points at the moment, because this is a highly relevant conversation in today's marketplace, because we're all having a bitch about bank retention teams. So here's the broker's retention team as such, if you like. Here's the payback, the slap back at the banks as such, and we see all the grubby little tactics that the banks are doing, like pulling the best deal, in the marketplace, right on the death of a settlement, pulling it out of the bottom drawer somewhere that nobody else can get. I actually think that's anti-competitive, and I am going to challenge it. Sorry, I dropped my digital pen. Sorry about that. I think it's anti-competitive. I think it's wrong, that whole approach to it. If you've had the opportunity to retain the client and you chose not to, then as far as I'm concerned, you've done your deal. But it's an issue. Retention's an issue for brokers all around the country, as obviously you found in what you're doing as a broker, and hence then your development into creating Sherlock as a digital means to retain your client. I think this is incredibly important for brokers to get their head around. So coming back to the three pieces that you were just speaking about a moment ago, how is the technology really driving each step of that? If I was a broker, the first thing is, how does that work for me? How does that ensure that those bastards in the bank aren't pinching that deal 24 hours out from settlement of a refinance? I guess the proactivity of being engaged with your client is a significant piece in this, but just can you talk to me just a little bit more about each of those 3 steps?
Yeah, absolutely. And look, I'll overlay that. I'll start with, trust. Trust is a big one. So trust with a broker, and then bank. Because brokers need banks, and they should have a trusted, honest relationship together, right? And trust is built through being honest and transparent.
You're talking about banks? Oh, sorry. I'll get in trouble for that.
It's one of these things where, I can't remember what the term is, but they both need each other to coexist and flourish, right? So why not help each other? And what I truly believe is that the lenders that will win over the next 5 years will be the ones that are fully transparent and honest and play to support the broker and the customer outcomes. And I think that.
All right. So if you go back to the Financial Services Royal Commission back in 2018. That's where the issues were. The fracture was around the lack of transparency, the truth, which eroded trust. Right?
Yep.
That's the fundamental of everything that happened through the Royal Commission. And so this very much plays back into exactly what you're saying now as to how things should be being conducted. And I agree. I think lenders, and probably more so my focus is probably on the banks, need to understand what you're talking about before, is that the relationship between bank and broker is symbiotic. Right? They both need each other. Right? If they work together, they're all so much more successful. When they work against each other, nothing plays out the way it really should. And to me, it's what I call a harmonic balance. When I was younger and a fit young man like you are, I used to teach martial arts. So on my arms, I'm quite some large tattoos all around yin yang balance, getting that balance right. When you get the balance right and that harmonic plays out, everything plays out really well. When it's not balanced, the whole thing's a screw up. There you go. Absolutely. Sorry, I injured you.
Yep.
I have a bad habit.
Yeah, and look, where I go with that is everyone looks really good if they put the customer outcome first, right? So the broker goes through a retention strategy with that lender. So I think all brokers with their existing clients should go through a retention strategy with that same lender to reprice that client before they look at refinancing. I think it's fair, ethical, and a good process. Now, it's a extremely difficult process and cumbersome process to go through, but we've automated that, which is good. But I think that repricing is good, but then there's got to be transparency and honesty from the bank to go, okay, we're actually coming back with our best price now, knowing that broker could refinance that client and not play these smoke and mirror games, because the broker's then doing the right thing by the customer and the lender to say, hey, look, everyone actually wins if the client just stays where they are. And seriously, they shouldn't be on 4.5%. You've known that for a long period of time. They should be on a competitive rate as if they were a new to bank client. So
our backbook issue is something that's been a thorn in the claw for a very long time, where you get all these teaser rates to bring people in, yet the backbook, the existing customers are all suffering with higher rates and things that just aren't readily available. And I could never understand, and I cut my teeth in banking. Yes, it was in the 70s, it was a little while ago, but I still remember it. But the reality is that if you're all transparent, if you all play the game the right way, everybody wins from this. There's no losers anywhere in the marketplace, except the client, to me. And this whole back book pricing versus new customer attraction stuff, or even these last minute retention things. So like these deals they pull out of the bottom drawer are not sustainable. I have a issue with it. So, well, you can do it one. Why aren't you doing it for everybody? Why aren't you doing it for everybody? Because you can't afford to. Right? It's not profitable business. You're doing it as a last-ditch effort because you're an arse and didn't do it earlier. That's what it says to me. And personally, if I was on the receiving end of that, even if it was a good deal, I personally would say with my broker, I know I'm biased in that conversation, but they've done all the work. You've told me to get nicked multiple times through this process, and you wouldn't voluntarily help me out. So your loyalty's not there. Why should my loyalty be there? And I think to me, it's brokers are desperately wanting answers to this. I know that, and I'm taking it up with government. That's only one part of the equation. The other part of this is, how do you physically do something yourselves, which is what we're talking about now. So what else works in this mindset of retention? So you talk about repricing, and you talk about the other pieces with it as well.
So technically how it works, I think this is really important for the brokers to understand this, because this is really the fundamental of how our platform chooses who should be repriced and where the broker should focus their energy. So, I mean, imagine as a broker, you've got 600, 1,000 clients. Like where do you even start? Like, how do you start? How do you know who's going to leave? Where should you start? And you just can't possibly cost effectively service all of them at the same point in time. It just doesn't work. And then also, clients don't move in an annual review cycle. Like, the anniversary of their home loan actually has no relevance to customers. So an annual review, you might be missing the opportunity. That client might be looking well and truly before their anniversary date of their home loan to do something. So we've built our own proprietary artificial intelligence model. So essentially what that means in simple terms is we look at what is the cost benefit of that client moving to a competitor in market. And then you need to overlay that based on their income and how much income they're earning. So as an example, $3,000 to me is going to have a different value to you, to someone else, based on your income and your expenses. Then what we look at, because that's the number one reason why people refinance, is because their rates are uncompetitive and they can save money, right? That's fundamentally the number one reason people refinance, and people refinance away from their existing broker. We look at that as one pillar, the financial benefit. We also then look at the pillar in our models, which is how easily can this person move, right? And then to give you a real granular example of that, the likelihood of someone who's a single PAYG person on 100K income, it's more likely that they're going to refinance from a broker than a professional couple with 4 kids, right? And now that comes down to a whole lot of underlying data under that. Serviceability, expenses, but also just the fact that those parents won't have, that couple won't have the time just to sit down and go through this and commit the time to it. So our models look at all the data trends and the insights, and then we build up our predictive modeling from that. We also then overlay that with, I was going to say, we'd also overlay that with, can this person actually go and get a loan with those lenders in the market based on the data that what we can see. And that's essentially how we focus the broker's energy, because you should focus your energy not on, it's just not viable to focus your energy on all clients. We'd love to, that's the utopia, but it's almost impossible because you just can't do it. So you need to focus your energy on those that are at risk of leaving at that point in time. And we get brokers into a weekly rhythm based on that.
Okay, so this is all driven by artificial intelligence, AI. Is this the beginning of Terminator 24, the rise of the machines, the rise of the broker AI taking over the world? Is that what we're on the cusp of, or is this a really good thing? No, I joke. To me, this is a really good thing. I think it's quite exciting where the whole, I hate the term Twitter, but the whole fintech space is going. And I've spoken many times to industry where I've said, don't be scared of fintech. Don't be concerned where technology is going. To me, and mate, Adam, I'm happy for you to correct me, but my conversation is generally around the growth of fintech is there to do the grunt work for you so that you can stay with a client, whether it's face-to-face through a screen or in person, but that part of the relationship to me won't change anytime soon. But the real progress and growth of the broker marketplace sits around having somebody else do the grunt work for you. It's called technology. And if it can do it efficiently and effectively and quickly, which obviously can with the right inputs, then our market penetration as brokers will go beyond 70% to 80% market penetration. I also believe this, what you're doing and generally growth of the technology within industry will also take care of the bank retention teams. Because if you take the people out of it, who are picking up, making that phone call and putting out these dodgy schmuck deals that nobody else can get, all of a sudden they sort of go, well, that's taken out of the equation now. But we need people like yourselves and others in the fintech space to actually develop and progress these things in line with what market needs are. But also, I think just where the future's heading, and I'd be interested in your thoughts around where you see technology is going in our marketplace. We are where we are today, and then as we go to the next 5 to 10 years, knowing at the rate at which technology progresses, to me, there's some really exciting times in front of us if we get it right.
Yeah.
What are your thoughts?
Yeah. So, so my thoughts, and I think I'm right because I'm biased, but we've put a lot of thought into this and where it's going to go.
I'm right. I'm biased.
But look, we've put a lot of thought into it because we're building a fintech for brokers, not now, but then needs to move them to the future. And I fundamentally think the role of a broker is going to change, right? So right now, a broker, in my view, is an advice. They provide advice and they spend maybe an hour on advice and then they spend 12 to 18 hours on processing.
Guidance.
Like
financial planners giving advice. We'll call it guidance.
Guidance and assistance, right? So they spend like an hour on the guidance and assistance, and then they spend 18 hours or so processing and just getting the deal across the line. So I think the fundamental shift is going to be, I think brokers will always exist and always be a strong force and have majority market share. The processing, fintech's just going to automate the processing, leveraging data and data insights to take away, like think about it, and it's probably only 3, 4, 5 years away. I mean, if I was a business that had a large offshore team, I would be scared as an offshore team because that's the first thing that's going to be automated. They're low value tasks that people are doing on a repetitive basis. They're the easiest ones to do. So fintech is not going to replace
sort of box as well, chatbots.
Yeah, absolutely. I mean, chatbots are these things that, if you think about human behavior, right, technology changes. There's a rule with technology that every, I think it's 14 months, it doubles in capacity and gets smarter, and then it halves in cost. So technology is on this like ever increasing exponential growth with what it can do. The human brain, though, hasn't changed for hundreds of years, right? And human behaviors haven't changed for hundreds of years. And then you put that in a simple, real tangible, real life example. You go out for dinner and you always ask someone next to you, oh, what are you getting? Right? Now you ask them that because you're interested and you want validation. Is what I'm choosing the right thing? Now this applies to brokers. So for brokers, their customers are always going to want to, and their clients are always going to want to go, hey, is this the right decision? They will get their research from online. They'll be more educated when they come to the broker. We've already seen that. But they're always going to go, hey, this is my situation. This is kind of what I'm thinking. Am I on the right track? And can you validate this and then help me? And then the brokers will have fintech tools that will automate all the processing of the submission, the approvals, how they can essentially service that client using technology rather than doing manual processes.
Yeah, sure. Hey, questions are flowing in thick and fast, by the way. So, well, yeah, cool. I probably should deal with them before I lose track of where they're all at. But this question I'm going to ask now is actually very relevant to what you were just talking about. So I think it slots in nicely at this time. It says, the question is, what data does Sherlock access and how is this secured, i.e. in terms of privacy, consent and hacking potential? How do you deal with that? 'Cause that's a big question everybody's on about. And look, the reality is, it's also part of the future. If we're going to be driven by technology, this has to be sorted. So I'm assuming you've got something there for them.
Yeah, absolutely. I mean, so the data that's collected, as you think about application data is collected from the CRM system, and that's done through multiple ways depending on how it's integrated with the aggregators. But that's essentially the data that we look at. From a security perspective, absolutely, we're working with aggregators where we'll have 3 aggregators on our platform, officially fully deep integrations done this year, which is super exciting for us. We don't go through that. We went through 9 months of due diligence with these aggregators for them to do their security pen testing. That audits everything on us, and we're constantly getting security reviews and penetration testing done. So absolutely, it's secure. You've got different security things. You've got security with how you store and secure and pass data, whether it be in transit or in your platform, but then you've actually got secure process and policies for your team to develop as well. So yeah, absolutely, that's one of the most critical things.
And you'd have to be compliant with Australian standards.
Oh, absolutely, yeah. You just have to.
Yeah, you touched on a piece there before about aggregators. A question I've got in is how you're finding aggregators responding to Sherlock. Are most of them on board? Well, I guess onboarding is always a gradual process with time, with many pieces. But yeah, I'll leave that. It's probably confidential information for you, so I won't go into that. But how are you finding the response? I think that's interesting. What is the response like? And also, does this have to be done in conjunction with the aggregator, or could me as a broker deal direct with Sherlock independently without involving the aggregator? Because it's not cutting the aggregator out of anything. This is about client management. It's not about writing a loan to a lender, which is partially where the aggregator is sitting. And obviously aggregators, I would have thought, would be interested in this, but yeah. So how the aggregators finding it, and can brokers come direct if they want it?
Yeah, look, it's a really interesting one because so absolutely, you've got all spectrums of how the aggregators are viewing Sherlock. We've got full support from a few, and they're the first movers to adopt our technology and pushing it out to their brokers, which is fantastic. The brokers can use us independent of that as well, so that's not a problem. We've got ways that they can invite their clients, they can connect their data. Where we receive open banking data as well. You don't get that by just being a backyard company. You've got to go through a rigorous process.
Open banking data, right? CDR.
Yep. So we're currently testing and receiving the data for open banking. We're launching our customer portal probably in August now. We've put it on hold given the integration with aggregators, and we're focusing our time on that. But that'll be live data feeds coming from Sherlock.
That's the registration compliance for CDR. Is that what you're talking about? Or using a service plan?
Yep. So then we can consume that customer's data once they consent to the CDR open banking.
The reason I go on that's enormous, because that's really a tough gig to get, and not many people have that. That's huge.
Yeah, absolutely. I mean,
I don't know if everybody understands. That is actually really big.
It is, yeah. Look, we're hoping we'll actually be the first platform to, at scale, brokers can link all their clients to open banking and get live data, interest rates. And that's literally a matter of months away for us as a business, which is super exciting. So the brokers, I mean, I know the pain point for brokers. I mean, if you want to get a client's current interest rate, you'll sit on hold for, probably 2 or 3 hours just to find out what the rate is. That's going to be a redundant task. You just do not need to do that anymore. When you get the clients to consent to open banking, you have live product, switches, balance, limits, interest rate, everything at your fingertips. It's updated literally every hour. So,
mate, that is absolutely enormous. I've got questions coming fast and furious, mate. So sorry, I'm a little bit distracted on the phone. Just not stopping at the moment. Hence the reason why this conversation is so important. But yeah, again, folks, I can't stress enough how big an issue, or how big a thing it is being registered under CDR arrangements with government. It's not an easy task, and it, to me, is exactly where our future is going to be. But as you say, you could wait on the phone for hours and hours on end and get stuffed around to try and find out a simple piece of information. But under open banking regimes, you could have that quickly done. It's almost instantaneous. So an interesting question that has come up, though, with that in mind, and I haven't thought too much about this, so I'm not going to give credit to Leah, who gave me this question. Otherwise, I'll never hear the end of it. So we'll pretend it's from a broker, okay? Just between you and me and the other couple of hundred people. There you go. So with open banking and with this question, how do you stop the banks from seeing that data is being accessed? Do they just not see it? Or because here's a window of opportunity for banks to go, oh, somebody's poking around in here, I can see that, so I'll ring the client myself or reach out to the client myself. Is that still a risk for the moment, or do the banks see that, or they just not see it because it's too much?
Yeah. Look, absolutely, they will be able to see it. They will be able to see when a client consents to CDR open banking. Now, the difference is that you're going to see a spike in people consenting to it, and then the clients can actually consent for a period of time. So they'll consent for, say, a 12-month feed, and then they'll have to reconsent. Now, what we're seeing is that there's, they'll consent for their zero accounts. They'll consent for a multitude of reasons. So I think what the banks are going to see is the banks aren't necessarily, there's going to be a lot of noise in it. So if they were just going to go, hey, I want to see who's consented to open banking and they're at risk of leaving us, they're probably going to get multiple consents from those clients over a period of time. So if I was a broker and say, well, is that thing?
Well, they get it from other, as open banking periods, they'll get it from the other banks more so than anywhere else.
Absolutely. So they'll definitely see those consents coming through, but there's going to be a lot of noise, and it's going to be very hard for them to filter out and go, okay, well, this is a client who's doing it for the purpose of refinancing or obtaining a loan or doing something. But those clients consent for a period of time, and then you've got 12 months where those fees will be coming in, and then the clients need to reconsent to that.
Yeah. Okay. It's very exciting.
It's massive. It's massive. It really is. Yeah, it really is a game changer. The power you can see from the data is incredible.
All right. So the question I've got here, next one is, does Sherlock work on a book that was transferred? Somebody might have bought a book, for example, so they didn't actually originate it in the first instance. They've bought the book. Is that something you can work with? How's it go?
So yes, our platform can do it, and it could function exactly how it should. But what we've found is that the lenders won't honour those reprices. So from a repricing perspective, so Sherlock can predict which of those clients are going to leave. What we're doing is we're actually building we call it an orphan book client. So it's a client where the broker that originally originated that loan is not there anymore, whether they be a loan writer or you've purchased the book. We'll flag that, and then the broker can actually trigger either a review, so they can trigger a conversation of a review, or they can actually just entice a refinance conversation with that client to then open up the discussion about what their options are and what they should do. So the technical reason for why the repricings don't work across majority of the lenders is that when the lenders look up in their systems and they go, hey, this client's with, broker code X, and that broker code is a broker who's inactive or not with that company or sold their book, they then can't match it up to then pass the security checks to then actually honour that, honour or process that reprice. So the majority of those come back declined.
Yeah. Okay. So I keep being asked here about questions about aggregators, so I'm not going to jump too deeply into this one, but I think principally you are already on board with certain aggregators or in the throes of finalising that at the moment.
Yes.
And I believe you've got some announcements that'll be coming up in the next weeks or months. So I don't want you to breach any privacy conditions with anything like that, or confidentiality rules with anything like that. But needless to say, you are on board with certain aggregators. I suggest brokers actually talk to their aggregator, see if Sherlock is, and if not, why not? And there's a shameless plug. And I'm going to say this just for a transparency piece. If everybody saw the screen earlier, let's see if I can get that to marry in somewhere. That which one is it? It's that one. So that's the list of all of our sponsors. We notice Sherlock's not on the list. This is not a paid promotion. No disrespect, and I do want him as a sponsor, but this isn't a paid promotion. This is just a genuine conversation. I want people to understand that, because this is really important and it's a part of our future. And when we have all these issues and concerns in the marketplace with bank retention teams, here's a part of our payback, if you like. But also, too, to my mind, this is so important as we're heading into the current environment of rising interest rates. We've gone 50 basis points last month, or this month. We're likely to go again 50, maybe more. The US just jumped 75 basis points in one step, right? We may go more than 50 basis points. It was rumored to possibly be 60, but rates are going up. I've been saying this for years, to be honest with you. It's only a matter of time. But this is the time you've got to stay close to your client. This is the time you need to be looking at what their situation is. This is the time to understand what their current loans are like and whether or not they need help before the banks get their ugly hooks into them. And don't act in the best interest of the client. Banks aren't governed by the best interest duty. You as a broker are, and that's why you do the job that you do it so perfectly well. And that's all supported with data. But this is critical.
Yeah, just I mean, just on that, mate. I mean, we've seen. I mean, like I love looking at data because data doesn't lie, right? And it tells you what's going to happen in the future. And we've seen since 2019, we've seen a like 300% increase almost in refinancing activity. So 3 times as much refinancing is happening in the last 2 to 3 years, right? Now that's without an interest rate rise. Now there's a few things that have driven that, cashback from lenders, all those types of things. What we're seeing though is we're seeing that this interest rate rise and the future interest rate rises is actually going to be the second wave of refinancing activity. This is going to spur it because the first time in 10, 11 years, an interest rate rise has cost the customer, right? Now that's fundamentally massive, right? So homeowners around the country, and that's probably 2 generations of homeowners that have never seen an interest rate rise. I mean, that is you can't probably overstress how massive this is. And then we've had 2 interest rate rises, a significant one, and potentially some more significant ones coming. So the fundamental thing that we're predicting is we're predicting that refinancing activity will increase. If brokers are writing 70% market share, then they've got the majority of clients to lose from that refinance activity now, right? Which is very different to 10 years ago, which means they have to be focusing on client retention. Like they just have to, or they're going to have this leaky bucket where the clients just fall out the back and they just have to keep filling up the top of the bucket.
Wow. I thinking around the country at our PD days and at aggregators conferences and stuff. I mean, everybody is so busy. It ain't over yet. There's a lot more coming down the pipe. But, and that's a good thing. I mean, you talked about the GFC when we first started talking this morning, and I remember that period very well. Obviously, I was in the middle of it, and the run from 2000 to that 2008 era, where theoretically by 2005, maybe just after, we should have gone into a small recession period, so we should have dipped back a bit. We didn't. We just kept going through it. Everybody was so busy, but you got to make make money while the sun shines. It won't last forever, but we will reset at a new norm. I'm very convinced of that. And it's just a matter. It's a bit like property prices that have soared up, and some of them have plateaued, some of them pulled back a bit. There's probably still a 10% tolerance to come back a bit somewhere in major areas, not necessarily in regional areas, but there's still a bit of play in all of that. And that same thing will happen with our sector and how busy we are. It's the same with interest rates. In my entire career, so it spans over 4 decades, we've never had interest rates this low, right? And we've never had low interest rates sustained for so long. It's the exception, not the rule. It's not going to stay that way. Interest rates, as far as I'm concerned, for retail rates to the client are going to sit somewhere around 4.5% to 6% in the next 12 to 18 months. That's where it's going to reset. Hopefully it's on the lower side of that. But we're expecting inflation at, 5.1. They're now saying it's going to go to 7. We look at the cost of funds globally in regards to the wholesale markets for lending. Everywhere's gone up. And in Europe, for a while, the bond market completely closed. So you couldn't empty out warehouses for securitization. Whole host of issues like worldwide. So it's not just an us thing, but we've all got to deal with it. And the opportunities are just going to be enormous for a while to come yet. Especially when we get to wherever the home loan rates reset at, and whether it's 4.5%, 5.5%, or where it is. But somewhere up there probably makes economic sense, to be honest with you, for long-term sustainability. It's not too high, not too low. It has a better chance to stay like that over a sustained period rather than abnormally low interest rates or stupidly high interest rates. We get back into that marketplace, and once that settles down, things will start to rationalise again. But there's enormous opportunities for brokers everywhere.
And just with that as well, I mean, what we see in the rise, I mean, there's 2 things. You've got to be proactive with your retention strategy, so you can't be reactive. So brokers have to be proactive. If you're reactive, you're going to miss the opportunity, and you'll just see a trail commission drop off, and that's when you're going to learn your clients left, which is way too late. Yeah, way too late. And the second thing is so proactive, and then proactively reprice. Like imagine how would you feel if you were a client that all of a sudden you got an SMS and an email from your broker that says, hey, look, I just wanted to let you know we reviewed your rate. We've knocked off half a percent, 50 basis points, and we're saving you $1,500. There's nothing for you to do. This is just part of my service. I mean, straight away the broker's the absolute hero in their eyes. It's just a thing that brokers just have to get into the habit of doing this as a weekly routine at the moment, because the risk is that they.
Yeah, I know this may seem a bit of an obvious, but so that repricing scenario, and then an SMS or an email, whatever it is that automated off the platform, or is it sort of the platform works the numbers in, the broker then has to send off the email or the SMS?
Yeah, look, we work around a single click. I mean, I was a broker. I know how busy brokers are. Like, massive respect for brokers, having been a broker, and I was only wrapped up being a broker like 18 months ago, so I was relatively recent as being a broker. So single click. So we tell a broker, Sherlock will tell you when you have to do something. So when there's a list of clients that need to be repriced, you then come in, you click single click to approve that. Our engine does the work. And then when the lender response comes in, you click a button and it automatically generates the email and the SMS, and then you send that off. So yeah, so there is some working where the brokers have to do, where the lenders haven't quite automated the process properly, and there's a few little nuances, but we're continually improving that, because we don't want the brokers to do any more than a single click. Approve the reprice and approve the communication that goes out, and that it should really, and it is that simple. So, because otherwise it just becomes too hard, and you fall back into this trap of, I have to have a full-time person or an offshore team to do this, and it's just not cost efficient.
Yeah. I've got another question here. It says, what's the sensible response in a positive manner to clients for the rate rises that are coming?
Really?
On that?
Yeah, really good question.
Of course, we can't change it. I'm not Moses. I can't stop the waters from coming in.
Yeah, look, it's look, I think for brokers, they just need to be close to the client, right? So I see a broker as as the trusted person in that client's life that should be talking about their home loan, right? And what this means. So if you're not having conversations with your clients about rate rises, then do it. I mean, the easiest way, I always look at this, okay, what's a way that you could do this efficiently? I mean, we're having a webinar here, there's a couple hundred people on it. Run a webinar for your clients at 5 o'clock or 6 o'clock at night, where they can just jump on from home and just give them an overview of interest rates are rising, and this is what you should do, and these are the things you should do. And you can service 200-300 clients at once. And then if there's a call to action where they need to call out to you, then you can deal with it from there. That to me is a higher value exchange for existing clients, and you're doing it at scale. I mean, these are the little things that I would absolutely recommend you do. And you'll be surprised, you'll get majority of your clients tuning into these, and run that once every 3 weeks or every month, because that's going to be engaging.
Couldn't you?
Yeah. Yep. And even emails. I mean, email communication is great. The emails do get lost quite a bit in inboxes, because inboxes are full now. So, I mean, a little tip for brokers is, if you're ever sending an important email that you need your clients to read, send them an SMS at the same time that says, hey, I've sent you an important email, look in your inbox. It increases the open rate, like, phenomenally, like 10x open rate increase. Like, we've seen that in our communication. It absolutely fundamentally changes the open rates. And I'll be sending in to clients and saying, hey, look, be prepared for an interest rate environment. Interest rates are rising. This is what it means to you, and these are your options. You have to give them solutions in that. We can have a discussion and review your situation. We can talk about fixed rates if you're really concerned that you can't afford repayments, or if it meets your best interest in doing that. You need to provide them with some solutions so they can call out to you and have those conversations.
Yeah, most certainly. We did a Q&A with Whitey the other week with a couple of brokers that actually talked a lot more and in more detail on what brokers can be doing for their clients. So I would encourage all of you to look at that. It's on our YouTube channel. A bit of shameless promotion by one of my staff members sending me a text to remind me. Tell you, at least they're sharp and they're onto it. The whole piece around keeping close to your clients is just imperative at this point in time. And really, to me, it resets another new normal, because that ain't going to change for quite some time. And in all honesty, it's just good business practice. Yeah,
it is.
Why aren't you once a quarter just running a webinar for your clients, just on whatever?
Yeah, absolutely.
Especially emails these days, everybody's emails bins are so full. Yeah, it just gets lost in the ether, or it's, oh, you know, I'm too busy. But if you do even a short 10-minute update or something, it's all valuable stuff.
Whitey, one more thing that we're really trying to shift the mindset of brokers, right? And I think this is really important. So, I think everything starts with your mindset. Your mindset changes your approach and your execution, right?
Correct.
Retention is prospecting. And I think brokers need to. Retention has always been an afterthought when I've got time and it just gets deprioritized, right? But retention is uncovering opportunities with your clients that keep them for longer and actually opens up opportunities to better service them. And I think this is a fundamental thing we're trying to push through the industry now, is that retention is prospecting, and you need to see it as higher value task to do as prospecting. Retention comes down to conversations, repricing, and reviews, right? You have to make sure you're having those with your existing clients, and it needs to be a non-negotiable.
Yeah, and when you open that door, of course, you're not just talking home loans. They may be looking for a car loan, personal loan. They may want a boat. They may want to go on a holidays. It opens up an entire avenue, and of course into SME lending, because a lot of brokers' clients will be small business people who will be needing, whether it's trade finance, whether it be leasing for plant and equipment, doing developments, small property investments, whatever. But it keeps that door open for all of those conversations rather than missing out. And yes, it's all about retention. And yeah, that's a very, very important point. And it is so easily overlooked. I guess when we get really busy, that becomes the problem. And this is why having technology to drive it becomes such an important piece.
And also, it's not it's not the broker's fault. Like, it's not the broker's fault that they didn't know retention should be prospecting, right? Because the industry hasn't taught them this, right? I know as a broker, the industry teaches you go out, find leads, convert deals, do the right thing by your client, and then, like, you know, have some sort of post-settlement, you know, communication with your client. But, you know, the industry doesn't reward the broker that's retained the most clients. There's no award for that. There's no retention award. It's whoever's written the most business, or it's whoever's got the best office. And you know, like, that's fantastic. But if you're filling an empty bucket, like, you know, you've got to write some significant volumes every single year just to make sure you keep your trail bookers, you know, as even year on year. So, like, retention is, we've really got to shift the conversation, especially in a rising rate environment, to look, you've got to focus on retention. With retention's prospecting.
Yeah, unquestionably so. Adam, that's been really fascinating conversation, mate. Is there any last piece of wisdom you'd like to leave us with, besides all the other wisdom you've blessed us with this morning?
Oh, probably nothing useful, right? So, I mean, hopefully this is of value. I mean, the only thing, I mean, I guess the key things are, I mean, I'm massive pro broker industry. I think brokers are doing an incredible job. It's so good. Like, it's amazing. If you're not using Sherlock, like, do something for your retention. Just make sure you're doing something, even if it's a little thing, you know, just two calls or 2 clients a day will make a big difference to your business. And have a look at the really cool tech that's being built by brokers, because there's some brokers out there that are building some amazing technology which is solving a real problem, and get out and there, support them. You know, like our business, there's other businesses out there, you know, tech companies that they're moving really quickly, they're solving a problem, and they will only be successful if brokers use that technology, right? You know, otherwise they'll just go, oh, look, that was kind of fun, we had a crack, but it disappeared. So the support of the brokers, those businesses are putting brokers first, so make sure you support those and have a look at it, because it'll make your life a heck of a lot easier as well.
Yeah, most certainly. Buddy, thanks so much for that. Hey, I've got one last question before I let you go. Why the name Sherlock?
Oh, funny story. We had this horrendous name. It was called Refi Me back in the day. Like, it was just so bad. It was like really conceptual. You know, 2 years ago, like, what are we going to call ourselves? We just had to register a company, so we just registered this, you know, name. And I mean, like, this doesn't have any relevance. So we probably, like, for 2 or 3 months, we could not think of a business name. So I took a couple of my team out, my advisory board, and I took them to a pub, and I said, look, we're not leaving until we've got a name. I don't care how much. I don't condone drinking too much alcohol, but we did consume a few frothies that night, and it was a case of creative juices, right? So we were probably there for 4 or 5 hours. We had hundreds of Post-it notes like all over this bar table, and people thought we were crazy, and we would just think of funny names. We'd write it down and stick them down, and all of a sudden we went, oh, what about Sherlock loans? And we all kind of just laughed at it, and we're like, okay, there's something in that. And that's essentially how we got to Sherlock. We dropped the loans because brokers' clients thought we were a lender, so we dropped that, and we had to drop the C in Sherlock because we're a fintech and you've got to be cool and drop a letter. So that's how we came up with Sherlock. But the story a bit behind that is looking into discovering, uncovering in a quirky way opportunities that exist in solving problems, and that's really what we're doing for Brokers for Attention.
Love it, love it.
Yeah.
My friend, thank you so much. Thoroughly enjoyed our conversation this morning. Everybody, Adam Grocke, CEO and founder of Sherlock, please thank him. And mate, I will watch with great interest as Sherlock develops and continues off on its journey in the Australian marketplace. And it's a very important piece of the mortgage broking sector that people need to be aware of. And they need to be speaking to their clients. And here's one way to do it. So all power to you, my friend. Thank you. Be well, be safe, and I'll talk to you soon.
Sounds good. Thanks, buddy. Cheers.
Thanks, mate. Bye. Well, I hope you enjoyed that as much as I did. I'm fascinated with that conversation, where technology's going and what the future's looking like. And of course, the conversation with speaking to your clients to retain them as part of your prospecting strategies is just so seriously important. So anyhow, that's pretty much it for us today. Keep an eye out on the future on our website for webinars that are coming up. Next Q&A with Whitey will be up on the 28th of July. We're going to be talking to one of the mortgage brokers in the industry with a fascinating story for us. So we'll look forward to that conversation as well. But otherwise, we're done. And thank you for being a part of us. We start our next series of education, which we call Learn and Earn, a series of online events for you. And then we'll be back face-to-face by the end of the year. Anyhow, thanks once again to our sponsors. We appreciate their support. And if I'm lucky, I'll hook Adam as a sponsor one day as well. And don't forget, you'll get a little email from us with a bit of feedback and also your CPD allocation for today. Thanks, everyone. Be well, be safe, and look forward to seeing you soon. Bye for now.